Welcome to today's Daily Report Market Analysis videos with me, Richard Perry, Market Analyst at Hantec, on Friday the 5th of June. It is Non-Farm Payrolls Friday, and into Non-Farm Payrolls Friday we have a strong risk sentiment pulling through once more. Really strong move that we saw yesterday on markets, predominantly through Europe, whereby you had that ECB decision to increase the Pandemic Emergency Purchase Programme, the PEPP, by another 600 billion euros. And that was higher than expected and supported the euro. Euro stormed higher and really did go. And the dollar remains under pressure. A little bit of a turnaround, though, today, interestingly. Let's just have a think about how this is affecting, certainly, first of all, the euro. Euro was strongly higher early doors. It's now started to creep little bit lower. Now this is interesting because market now knows what the ECB's support is going to be doing for the euro, and it's had a massive strong run. It's my chart of the day, which is euro yen, but I'll obviously talk about euro dollar as well and the impact on that. But euro has a massive run and prospect of possible profit taking maybe. So let's just think about that in the back of our minds. But also equities. Look at the equities run higher. DAX another 2% higher. You can see that US futures just grind out constantly higher, and the DAX is sort of playing its role in that as well. Interesting moves that we've seen in the last 24 hours or so. A really strong move to the upside now starting to develop through Treasury Yields. Now, I think this is a little bit of a not a surprise necessarily, but I think it's going to be a move that isn't really going to last necessarily. I think it's going to start to slip back again, but Treasury is ticking higher is obviously positive for risk and negative for the dollar, and we can see that the dollar breaking down. Treasury yields pulling higher on a risk appetite angle is negative for the dollar because the dollar currently trades as a safe haven. So that's why we're seeing the dollar still lower. But how that euro performs is going to affect the dollar index in the near term anyway. But still some strong moves that we're seeing through risk plays such as the Aussie, the Kiwi, even sterling up at 26.45, which is its April highs against the dollar. Gold price, a bit mixed. Lost a little bit of traction. I'll talk about that in a bit. But yeah, some interesting moves that we're getting on ahead of payrolls Friday. Now, in terms of payrolls, it is the one data point really to look out for today. And we're expecting another massive amount of job losses. 8 million job losses is the expectation. But I mean, in the context of April's data, 20.5 million. Obviously, it's better than that, but still massive job losses. But look at the range of expectations. On Reuters, this is 17 million down to just 1.6 million of job losses. So the market is all over the shop. So it just means that the reaction could be a little bit mixed, I would say. We're also looking for average earnings to continue to go up. That is an anomaly and a function of the job losses which come out through predominantly service sector based jobs, sort of waitressing and things like that, which takes a whole band of low paid jobs out of the market. So subsequently wage growth actually pings higher on the back of that. Not really anything to do with the strength of the labour market. And obviously unemployment, again, to climb by 5%, incredible numbers, towards 20%. Well, again, it could, the range of expectations on that is quite wide. So payroll support today, but interesting that recently we've seen the data, mixed data, has tended to be strong for markets still. I mean, markets are still playing for the risk recovery of countries coming out of lockdown. So yeah, that's an interesting move there. Anyway, right, my chart of the day. Euro yen today. What a move we've seen in euro yen. Yen has been an underperformer basically across the forex majors, but a really look at that run high, 117 figure. Well, this was the day that it really kicked off, 18th of May, when Germany and France first started talking about debt mutualisation, really, and the prospect of the European EU Recovery Fund paying grants rather than loans, and that really started to see the euro jumping, and it just hasn't stopped really. A little bit of a correction, but since then of 117, it's just gone north, completely north, through a whole load of resistance, through the January, February, March resistance, and it's now sort of at 12-month highs. Incredible. But, and I say this, but is it a move that is sustainable? Well, I mean, you look at the hourly chart, and it is obviously very strong on the run higher, but slight negative divergence starting to come through on the RSI. Market has pulled back in the last 2 hours. That support of the reaction, though, that was the ECB decision yesterday, then the initial kick lower and then rebound. So the kick lower of the ECB has left us a basis of support around 123.20. Maybe that is a level to watch. I've spoken previously this week about the sort of run higher, which 55-day moving average, 55-hour moving average on the on euro yen is an interesting basis of support. But you need to watch out for 40 to 45 area on the hourly RSI. If you start to drop below that, that would again sort of suggest that the rally has rolled over. Yeah, and just take mind in the fact that we do have this payrolls report today. Payrolls are going to make it a bit of a possibly a choppy day. So if the market does complete that and it falls lower actually into the close, and actually we see a negative candle, that would be a shooting star. And that would be certainly warning signal on the daily chart. If it starts to close under the support of the breakouts, 23.35 is the initial support, but 22.85 I'd take more being this year's high as well as a basis of support. And if you start to see these breaches going, then you could start to see a quite more of a considered corrective move, because obviously it has gone so far so quickly. You could see that retracement move. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website, sign up for our webinars, and click to watch our Trader Talks videos to gain some top trading ideas.